Hello and good morning, everybody. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with a short coverage of the North American markets first. Yesterday, both main indexes were sideways, Dow and Nasdaq, that is. The Dixie Index is down just a little bit. Today, we have a Labor Day bank holiday. Still, we do have a couple of events on the agenda: labor market conditions index reports and consumer credit change. Tomorrow, interest rate decision and bank statement from the Royal Bank of Canada are due. And that's about it for the North American markets. No big movements on the currency pairs. Euro markets, little change in the price feed for the German DAX30 and the French CAC40 yesterday, just with 20 points each or something like that. Euro dollar, little change to the green side. Euro pound, 30 pips down, 15 down already today. Euro Aussie, 20 down, 40 up today. Euro loonie, 30 up already today. Euro yen, 30 up, 60 up today already. And euro versus the Kiwi, 60 up yesterday. We have the European zone GDP year-on-year and quarter-on-quarter reports. This is what is on the agenda for today. No big events on the UK markets. We're going to talk about them tomorrow and by the end of the week. Asian Pacific markets, the Nikkei 225, 540 range yesterday, 150 points up yesterday. Quite a lot down today. Asian stocks slipped and the dollar weakened against most major pairs after China trade report highlighted the fragility of global demand just 1 week before the Federal Reserve decides whether to increase the US interest rates or not. Yesterday in Japan, we had the Echo Watchers survey. The outlook came out lower, 48.2 from previous 52. And the current for August came out 2.3 worse than previous, and now at 49.30. The gross domestic product quarter-on-quarter for the second quarter came out 0.1% higher than previous. Analyzed is better than the expectations. Now 1.2%, expected 1.8, in previous 1.6. The deflator year-on-year for the second quarter 0.1% less than previous. The JPY money supply reports is due today and tomorrow. Foreign investments in Japan stocks and the foreign bond investments in Japan. China imports year-on-year came out 5.7% worse than the expectations at 5.6% worse than previous, now 13.8%. The exports year-on-year came out 1.5% better than the expectations and 2.8% better than the previous reading, now at 5.5%. The trade balance overall came with 12 billion better than the previous and 17 billion better than the expectations, now at 60.24 billion. China's government has spent 1.5 trillion yuan, $236 billion, that is, trying to shore up its stock market since the rout began 3 months ago, according to Goldman Sachs Group. On Thursday, we have the producer price index reports year-on-year and month-on-month. Moving down the line, Australian business conditions in August were the strongest in 10 months as trading and profitability improved. This gave a bullish boost to both Aussie and the Kiwi. The RBA closely monitors this business report, and there is a sufficient good news in here to keep the glass half full. Along with a much lower Australian dollar and healthy house price and credit growth, we do not see a rate cut by year end. When New Zealand central banker Graham Wheeler started rising interest rates last year, he said record low borrowing costs are dragging down inflation. Now, Wheeler is rapidly unwinding his monetary tightening as growth slows and inflation languishes near zero. He'll cut the official cash rate for third straight time in September 10th and again in October, returning it to 2.5% by the year end. Quite important news. We have a couple of events which are worth mentioning tomorrow, especially for the New Zealand dollar, monetary policy statement is due, press conference, and also the interest rate decision. Tomorrow, also, we have the Westpac consumer confidence for the Aussie, investment lending for homes, home loans, and the Governor Law will have a speech. Also, Governor DeBell will have a speech as well. Electronic card retail sales month-on-month and year-on-year reports are due as well. Thursday, we also have the Australian dollar part-time employment, full-time employment, employment change, participation rate, and the unemployment overall reports. We also have for the Kiwi business PMI and consumer inflation expectations for Australia. Moving along to the commodity sector, S&P 500 index had a range of only 17 points yesterday, currently at 1935 level. Gold had a range of almost $8, trading at $1,120 per troy ounce currently. Silver had a range of 17 cents, currently at $14.50. The WTI had $2 range yesterday, ended on the negative side at 44.30 now. Natural gas is trading at $2.65 at the moment. Yesterday it had a range of 8 cents. A little bit of a fundamental events here. Crude oil prices plummeted on Tuesday in Asia as China reported disappointing export and import figures from August, with incoming goods such as oil getting hit quite hard. Moreover, Exxon, Russian drillers, are oil world's top performance on measures including cash flow, profit margins, and share prices. The OAO, Rosneft, Lukoil, Russia's two largest oil producers, and the OAO, Gazprom Neft, are performing better than the Royal Dutch Shell, BP, and also ExxonMobil. Gold prices eased yesterday in Asia as China reported larger trade surplus that expected, though imports slumped, possibly signaling room to ease monetary policy further down the road this year. That was pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.